Good morning, good morning. How you guys doing today? Glad you guys can join me. Thanks for joining. 8 a.m. on this beautiful Tuesday, August 6th. Yesterday we had some big moves in the markets. Some really big ones, especially the stock indexes. And wasn't too surprised with the weakness. We've been wanting weakness in the markets for some time now because a lot of stocks that we wanted to accumulate were too high up on the charts and we needed them to drop. So the big move that we got in the indexes yesterday was lovely for those entries. We also got some big moves in some of the other currencies, and gold, oil had a significant drop as well. So I want to take a look at the current situation on the charts, look at the biases, take a brief look into the retail sentiment and see what that is telling us, and then we will go from there. All right, so we got, first things first, we got gold up on the charts right now. And let me take a look at the sentiment. So with respect to gold, we had that area of demand removed. We have supply up here. Price rallied up into the area of supply, and we got the drop to the downside. Long wick right here. All right. When we see long wicks, we know that they are caused by some emotional events that are triggering retail traders to make trades. So in this instance, the direction was to the downside. So a lot of people got caught here because as they were trading short, price gets down to here, the institutions reverse price back up to roughly where it was before the big drop. And so if we take a look at the positions held by retail traders, let's open up the chart here. And we can see, sure enough, let me bring this up to you. Let's go over to the 4-hour chart because I got the data for the 4-hour. And take a look here, okay? So as you can see, we had a increase in shorts. I'll throw it here, okay? That's the increase in shorts. And now they've decreased those shorts because once they realize that price isn't continuing lower, then they offload those short positions, reduce them, and that's the current situation right now. Okay. So we've been talking about, how the banks will have a bias in taking profits on long positions because they've accumulated such a massive position that they're reaching near maximum size. So the bias is to the downside, and this is something that we were pointing out in our latest CFTC video. I said if you were to take a look at price and try to determine what was the bias, is the bias that price is likely going to go up, or is price likely going to go down? The one that would win is bearish bias because of the current situation with the banks needing to offload long positions. Now, can price go higher? Sure, it can. They could take their positions and continue to push them higher because there is room between where positions are at now and where all-time maximum size is. But is it likely? It's not likely. Okay, it's not likely. But we do have this trend line here, okay, running throughout the chart. And as you can see, when the banks push price downwards, okay, they help instigate it, and retail traders were shorting down here, it did not even cross over that ascending trend line. And I think that's important. I think that's important because for the bias to become even larger to the downside, I'd say, if I had to think about percentages, what's the percent that price is going to drop at this stage? I'd say there's probably a 65% chance that's going to drop. But once this trend line gets broken through, that increases dramatically to 70, 75%. Okay. Then we can definitely see a move down towards this area of demand. If that were to get taken out, then we'd see an even greater drop. Okay. But for the time being, it's stuck. Price is stuck. We've got supply and we got the trend line, and price is stuck within here. Okay. If it breaks this supply, move higher. If it breaks this trend line, move lower. And that's it. It basically comes down to that. I would not be paying attention to anything else when it comes to gold. All right, let's take a look at silver. So we have a long bias on silver over a long period of time, nothing short term. And so we are expecting over the longer period of time, price to go higher. Short-term momentum definitely was to the downside. We can see that. I'm looking at positions held by retail traders right now. Looks like 52% of their positions are geared to the long side. Nothing aggressive at this point, so not even worth mentioning. We had located this area of supply here, right here. Okay, we located this area of supply. The institutions dropped price, rallied up into that area of supply, filled more of their positions. So for me, if there's going to be a significant move to the upside, this area that was supply needs to be taken out. Okay, that was a very pivotal supply area that was used for the facilitation of a move to the downside. So whatever price is going to do down here at this low doesn't matter to me. What matters to me is if we get a break up past that area of previous selling. That will signal to me that the institutions are taking this move to the upside seriously. Okay, so I'm going to be watching for that. I've been hearing about the Aussie. You know, recently we had a very aggressive position with retail traders, significantly long. Okay, significantly long. And that was up into even the 28th of the month, which would bring us to 28, right here. Okay. So retail traders were significantly long, like over 30,000. Okay, over 30,000. Let's see here. Yeah. Over 30,000. And, you know, some people were telling me, oh, you know, with retail traders being super aggressive with longs, isn't it likely that price is going to rally up? Well, the thing is, you have to combine it with supply and demand. Okay, you can't just look at retail sentiment and just assume that price is going to make a specific move because retail traders are aggressive with a certain position. It doesn't work that way. It may look like that because you might hear some of the things that I post in the Telegram channel, but what you're not realizing is that I'm taking many different pieces of information, combining it, and if it gives me a consensus, then that is when I use retail sentiment to help guide me in my trade. In this situation, look, retail traders were aggressive with their long positions here, but did they end up offloading those longs and it end up rallying? It didn't. What ended up happening is price drops even lower. So I know some people I've seen enter into long trades there because of the retail sentiment. Not the greatest idea, as you could see. It didn't end up working out. And again, it's because you have to consider the supply and demand dynamics, not just what's taking place with retail traders. Right now, it's pretty crazy. If you take a look at the figures, which I'll show you right now, Aussie's pretty aggressive. 67% of the overall positions are geared to the long side, but it's a large number. It's let me see, 11,115. Okay, not as big as what it was before, 30,000 here. They did offload those positions, but as you can see, it didn't trigger a move to the upside. Okay, so that's the current situation with that. We do have demand in the higher time frames, but I wouldn't be trading Aussie at this point. It's not a high odds scenario. What I do like, and this is the last one I'll leave with you, what I do like is the USCAD. Okay, and I had mentioned this to my members. What's happening on the USCAD is a very interesting situation. Okay, let me look again at retail positions. Retail is 72%. They used to be 87%, right here, 87% with 15,000 shorts. Okay, 15,000. Right now, shorts are at 72% at 8,000. So they've offloaded a significant portion of those shorts. But let's remember, when we examined the CFTC data, what have we been able to determine is that right up here, the institutions have reached a maximum size of longs. Okay. When they reach a maximum size, they typically need to take profits, which is going to fuel a move to the downside. So, very important, what I'm watching here are two things. We got this trend to the upside, and we got institutional demand. Okay. These are the two elements that are holding price up right now, too. And one of those two elements has already been broken through right here. The trend line has been broken through, not in the greatest way, but penetrating. Price has since retraced back up to the top portion of the trend line. But the other thing is this area of demand. Once this area of demand breaks through, that will open up the floodgates for a move lower. And I believe what's on its way is a drop like that. All right, so that's basically what I'm watching for this morning. Those are the key elements of the charts that I'm going to be paying attention to. Very tricky situations because we got, USCAD with significant longs. The pound recently just had significant longs. So we normally don't see a US dollar-led pair and, a pound US dollar or a euro US dollar or Kiwi US dollar be on the same situation. It's not typical that we see that. But we did see a nice sell-off in the pound recently. And so when we get the data this Friday, we'll take a look at that and see whether or not there was a significant offloading of long positions. I believe so. But anyways, there's going to be a lot more to come. So I hope you enjoyed this session. And until next time, you guys take care.